is up, ladies and gentlemen, and welcome back once again to Casual Cash. In today's episode, we're going to be telling the story about Avenge, which is a story about a business that lost 99.7% of its JSE value and in the last year has gone up over 300%, and also how you can maybe make some money off of it in the time to come. We're going to talk about the story, about the valuation, and also about the investment case for 2022. So let's get into it. What is Avenge? Avenge is a company that deals in infrastructure, construction, and resources, which basically means that it builds things, mostly for mining companies and public infrastructure, but it also has a business in steel and water treatment. It operates in different areas around the world, mainly Southern Africa, and then also a very big business in Australia. The company has been around forever. It was founded in 1880, 142 years ago, as Anglo-Val Engineering, hence the AV Engineering, or Avenge. So 10 years ago, Avenge was the largest construction firm in the country. But then from 2008, it started losing value and has now lost 99.7% of its total share price, a peak of over 1 million rand a share in today's terms to now just over 2,000 rand. So we're going to talk about why it lost so much value before we get to why there's so much upside potential to the share price. Simply put, these guys were first hit by the financial crisis of 2008. Now, whenever there's a financial crisis, the first thing to stop is infrastructure and building projects. No one wants to build when the world is falling apart. As with most companies, they started to recover slowly after this in 2009, but they were hit by a series of blows next. The top of the construction cycle was reached, and there was a major slowdown in construction and government spending on infrastructure. This was made worse by the level of debt they had taken on after they bought companies like McDonnell Dowell in Australia. So long story short, they had massive debts, and when the building cycle went down, they were over-leveraged and had much less projects for income. This started a spiral that saw their CEO resigning, and revenues of 50 billion rand a year turned to losses of 6.4 billion rand. So in the year that followed, there was major debt consolidation. They started selling non-performing assets, cutting costs, and trying to get new projects. They also recently did a share consolidation of 500 to 1. So for every 500 shares, it would be reduced to 1 share, but they would still hold their same value. And on the day, it led to many accounts, including mine, showing 500 times their value. So if you look here, I was showing a 3.5 million profit before they normalized the share price, which is obviously not accurate, but right now it's back to normal. So let's fast forward to today. The company is 99.8% down on its share price from its peak, but it's also trading at 300% higher than just a year and a half ago. Now, the funny thing about maths is you can lose 99%, but if you return to the previous high from your same amount, you can make 143,000% return. Now, I don't think that will happen, obviously, but that is where our potential profit lies. When you're at rock bottom, 1 cent to 2 cents is 100% profit. The point being, starting from a low base means there's a lot of upside. Now, I bought Avenge shares 7 months ago, and today it's up by 47%. But will it continue to go up, and by how much? That's the question for today's video. So let's take a broad look at their latest financial results to see if they're improving, and if you have any questions on it, just comment on it below and I'll see if I can answer. So let's take a look. Their annual returns for 30th of June 2021. Let's have a look through here. All right, so we're looking at the McDonnell Dowell and Moorman's business. A core revenue increase from 14.2 billion to 20.9 billion. Work in hand went up from 26.8 billion June 2020 to 25.3. Operating earnings increased from 532 million loss for the period last year to 536 million profit. Operating free cash flow They had a 5 million rand outflow previous year to 1.5 billion inflow this current year. Interest-bearing borrowings have decreased by 1 billion rand from 1.9 billion to roughly 900 million this year. Net cash position, 1 billion the year before, 1.1 billion this year. Earnings attributable to equity holders of the parent company increased from 1.1 billion rand loss to a 990 million rand profit. Headline earnings increased from a 950 million loss to a 751 million income. Earnings per share up from a 4.6 cents loss per share at the previous year and a 2.7 cents gain for this year. Headline earnings per share improvement of 6 cents from 4 cents loss to 2 cents gain. So if you look at those figures, those are some incredible percentage increases. Revenue up 23%, operational earnings up over 100%, headline earnings over 100%, free cash flow over 100%, group debt down by 42%, and net cash up over 100%. Let's go into the income segment. You can see here, I'm just going to go straight to the bottom line. 532 million rand loss the prior year to 536 million rand earnings for this year. All right, let's take it a little bit further. So that's the income statement, but income statements can be temporary. We're going to look at the balance sheet as well. So overall, they're looking at total assets of 12.4 billion, up from 11.6 billion the year before. Assets going up, that's a good sign. Liabilities. The liabilities, which are bad, usually debts, are down from 9.7 billion the year before to 8.9 billion this year. So assets going up, liabilities going down, both are positive financial indicators. Now, there's obviously a breakdown of all these figures in their financial reports. For the sake of the video, we're looking at the totals, but you're welcome to pull them and look through them yourself. And if you're interested, they've also lowered their injuries and carbon emissions. Never a bad thing. So the financials are looking good, and they're going from losses to profits. And that's what's been responsible for the 300% increase in share price over the last few years. This is a company that's looking to be turning around. But what you want to know is, what does the future look like? That 300% is in the past, but in their annual report, they had this to say. Over the past 2 years, Avenge has been significantly repositioned, recapitalized, and returned to profitability. The core businesses, McConnell Dowell and Moormans, represent the group's future. Both are on a path of profitable long-term growth with strong order books sustained by sound growth prospects and their market. Avenge's improved performance underpins the group's commitment to provide sustainable value creation for its shareholders, potentially us on the JSE. So let's look at their market segments. They've labeled Australia as their growth engine, where they've been seeing most of their growth in projects, big infrastructure growth from the Australian government and their stimulus actions, increased demand from private sector resources, and increasing commodity prices. They've also listed good growth opportunities in renewable energy, marine projects, water and gas pipelines, as well as major tunneling opportunities. And so far, they seem to be right, because Australia has seen a growing economy even during the later parts of the COVID pandemic and continuing into 2022. When it comes to New Zealand, growth has been more muted. I think this is mostly because of the heavy response New Zealand had to the pandemic, shutting down a lot of tourism and projects in the company. They mentioned that 2022 should bring more larger projects that were delayed in 2021, but we'll have to see. It does seem that longer term, New Zealand is a strong area for growth. Southeast Asia isn't worth mentioning too much. They don't have a large amount of business there, but it does seem to be competitive and they seem to be performing. Now, here in South Africa, although it's been a difficult market, they have anticipated good gains for 2022 because the commodities market has raised significantly. Even South Africa itself, our government, saw a major profit this last year based on increased mining and commodities exports. So the comments they made do seem to track. Now, with their major interest in steel, coal, mining, and water management, it may seem that South Africa would provide them with some hidden gems in 2022 as the economy opens up further and our lockdown levels continue to drop. So long story short, we have a company here who has restructured and recapitalized their balance sheet, restored profitability with their core businesses, growing earnings and work in hand of 25.3 billion with an optimistic outlook for 2022. So what does that mean for you as an investor? Well, it means a share price which has risen 300% in the last year based on that information above. And if you feel confident in their growth, there may be more gains to come in 2022. Because of such a low starting point, there's the potential for very large percentage gains, but we also have to remember why they were so low in the first place. So as an extra, I've included a quick fact sheet of the share price that you can pause on the video if you want to go into some of the details. So that's it for today, guys. If you found this useful, please feel free to like the video. And if you want more tips and insights, including insights into my portfolio, you're most welcome to subscribe to this channel, Casual Cash. I hope that you enjoyed the episode and maybe got the information that you need to look at the share more closely. Remember to only invest what you can lose and research if it's the right share for you. And hey, you might disagree with me and you're welcome to tell me if you do so. But until then, I'll catch you guys on the next one. Casual Cash. See you on the next episode. Cheers.